What if I told you some of the best investment opportunities are hiding in plain sight? Established giants, quietly dominating their fields, and currently trading at a discount. Today, I'm revealing 3 powerhouse companies: a global leader in treating major health conditions, a pioneer in cancer therapies, and a pharmaceutical giant with untapped potential. These companies are innovating and expanding fast, but their stock prices haven't caught up yet. I've done the research, and what I've found is too good not to share. So grab a coffee and pay close attention. This could define your portfolio. Hit the like button, let's get 1,000 likes on this one. Share the video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. First up is Novo Nordisk, ticker NVO, a titan in healthcare, yet still underestimated by many investors and analysts. While the company has been a household name in diabetes care for decades, its recent transformation into a global leader in weight management is nothing short of remarkable. Despite its size and influence, Novo Nordisk often flies under the radar compared to flashier tech or consumer brands, but its impact on global health is profound and growing. You've heard of their blockbuster drugs, Ozempic and Wegovy. These medications have become cultural phenomena, making headlines for their effectiveness in both diabetes and weight loss. They're not just pharmaceutical products. They've become part of the public conversation with celebrities, doctors, and everyday people discussing their transformative results. These aren't just medications, they've redefined diabetes and weight management. For millions of patients, Ozempic and Wegovy represent hope. Hope for a healthier future, for better quality of life, and for the possibility of reversing or managing chronic conditions that were once considered lifelong burdens. The medical community is witnessing a paradigm shift as these drugs offer new tools to combat 2 of the world's most pressing health challenges. Demand is off the charts, and Novo Nordisk is struggling to keep up, a good problem to have. Pharmacies are reporting shortages, and the company is ramping up production at an unprecedented pace. This surge in demand isn't just a short-term spike, it's a sign of a fundamental change in how society approaches obesity and metabolic health. Novo Nordisk's ability to scale up manufacturing will be a key factor in maintaining its leadership position. They're not just riding a trend, they're leading a global health revolution in diabetes and obesity. The company's vision extends far beyond selling medication. It's about changing the narrative around chronic disease, reducing stigma, and empowering patients to take control of their health. Novo Nordisk is actively partnering with healthcare systems, governments, and advocacy groups to drive awareness and improve access to treatment worldwide. The market sees their current success, but misses the scale and durability of their advantage. Many investors focus on quarterly numbers or short-term competition, but Novo Nordisk's moat is built on decades of scientific leadership, regulatory expertise, and a trusted brand. The company's ability to innovate and execute at scale is what truly sets it apart. Novo Nordisk has decades of expertise, a deep R&D pipeline, and is working on next-gen obesity treatments and oral versions that could be game-changers. Their research teams are exploring new molecules, delivery methods, and indications that could expand their reach even further. The company is also investing heavily in digital health and personalized medicine, aiming to stay ahead of the curve as healthcare evolves. Analysts worry about competition, but Novo Nordisk's first-mover advantage and brand loyalty are massive moats. Patients and doctors trust the brand, and switching costs are high in healthcare. The company's relationships with providers, payers, and regulators give it a unique edge that's hard to replicate. Even as new entrants emerge, Novo Nordisk's ecosystem is sticky and resilient. Their financials are stellar: double-digit growth, a rock-solid balance sheet, and a history of rewarding shareholders. Novo Nordisk consistently delivers strong earnings, healthy margins, and robust cash flow. The company's disciplined approach to capital allocation means it can invest in growth while returning value to investors through dividends and buybacks. The global obesity market is projected to be worth hundreds of billions, and Novo Nordisk is shaping it. As obesity rates climb worldwide, the demand for effective treatments will only increase. Novo Nordisk is not just participating in this market, they're defining its standards, setting the pace for innovation, and influencing policy and reimbursement decisions on a global scale. As more patients see results, word of mouth and doctor loyalty make their ecosystem even stickier. Success stories are spreading rapidly, both in clinics and across social media, fueling organic demand. Doctors are increasingly prescribing Novo Nordisk's drugs as first-line therapies, and patients are advocating for broader access and insurance coverage, Their global reach means they can scale products worldwide as obesity awareness grows. Novo Nordisk operates in more than 170 countries, with a sophisticated supply chain and local partnerships that enable rapid expansion. As emerging markets become more focused on chronic disease management, Novo Nordisk is well positioned to capture new growth opportunities. Yes, the valuation is high but justified by their growth and future potential. Investors often balk at premium multiples, but in Novo Nordisk's case, the numbers reflect a rare combination of current performance and long-term opportunity. The company's ability to innovate, execute, and expand into new markets supports a compelling investment thesis. Long-term trends, aging populations, and rising obesity make this a resilient investment. As society's age and lifestyles change, the prevalence of diabetes and obesity will continue to rise, creating sustained demand for Novo Nordisk's products. The company's focus on prevention, early intervention, and holistic care positions it to benefit from these demographic shifts for decades to come. Management is investing smartly in R&D and manufacturing to stay ahead. They're expanding production capacity, building new facilities, and forging strategic partnerships to ensure they can meet future demand. Their commitment to innovation is evident in their robust pipeline and willingness to pursue bold long-term bets. Their drugs are being studied for other conditions like cardiovascular disease and addiction, opening up even more markets. Early data suggests these treatments could have far-reaching benefits beyond weight loss, potentially transforming the standard of care for multiple chronic diseases. This diversification adds another layer of growth potential and reduces reliance on any single product. The narrative is shifting. Weight loss drugs are now seen as essential healthcare, not vanity. Governments and insurers are beginning to recognize the economic and social benefits of treating obesity as a medical condition, which could unlock broader reimbursement and access. Novo Nordisk is at the forefront of this cultural and policy transformation. Novo Nordisk's dominant position, deep pipeline, and strong financials make it a foundational growth stock. For investors seeking exposure to healthcare innovation, demographic tailwinds, and global scale, NVO stands out as a core holding. The company's track record of execution and adaptability gives confidence in its ability to navigate future challenges. The market is distracted by short-term competition, but the long-term story is just beginning. While headlines may focus on new entrants or pricing pressures, the real story is Novo Nordisk's relentless drive to innovate, expand, and lead. The company's vision extends far beyond the next quarter. It's about shaping the future of global health. With a market cap of $306.33 billion, the company reported impressive financials in 2024. Revenue came in at 290.4 billion Danish kroner, with a net income of 100.99 billion DKK. Its earnings per share stood at 23.51 DKK, and the PE ratio is currently 19.19. Investors are also enjoying a dividend yield of 2.53%. Despite strong fundamentals, the current share price of $69 trades at a significant discount, over 95% below its estimated fair value of $135.10, which may suggest an undervalued opportunity. There's more to be optimistic about. On July 25, 2025, the European Medicines Agency's committee issued a positive opinion recommending a label update for Alhemo, used in treating severe hemophilia A and B. This could drive broader market adoption. Novo Nordisk is also dominating the GLP-1 market, holding a staggering 62% global share. Flagship products like Wegovy and Ozempic continue to perform strongly, fueling expectations of long-term revenue growth. To meet demand, the company is expanding its manufacturing footprint, signaling confidence in future scalability. Analysts see it as a wide moat stock, thanks to consistent double-digit growth, a robust product pipeline, and an entrenched market presence. Risks exist, but Novo Nordisk's track record is outstanding. Every investment carries uncertainty, from regulatory changes to competitive threats, but Novo Nordisk has repeatedly demonstrated its ability to adapt and thrive. Their culture of scientific rigor, ethical leadership, and long-term thinking sets them apart in a crowded field. This is a stock to own, not trade. Novo Nordisk rewards patient investors who understand the power of compounding growth and the value of holding industry leaders through cycles. It's a company you can build a portfolio around, confident in its mission and execution. Do your own research, but I believe NVO is still massively underrated. The market may eventually catch on, but for now, there's an opportunity for those willing to look beyond the headlines and focus on fundamentals. Novo Nordisk is a generational growth story hiding in plain sight. As the world wakes up to the scale of the obesity epidemic and the promise of new treatments, Novo Nordisk is poised to lead the charge, delivering value to patients, society, and shareholders for years to come. Next up is Merck, ticker symbol MRK, a pharmaceutical powerhouse that's been quietly shaping the future of medicine for over a century. While many investors know Merck as a blue-chip name, Few realize just how dominant its oncology franchise has become, or how deep its innovation pipeline truly runs. In a market obsessed with the next big thing, Merck is a giant hiding in plain sight, with strengths that are often overlooked by Wall Street. At the heart of Merck's success is 𝗗𝗓𝗏, their flagship immunotherapy. This isn't just another cancer drug, it's a revolutionary treatment that's changed the standard of care for dozens of cancers, from lung to melanoma. 𝗗𝗓𝗏's ability to harness the body's own immune system to fight cancer has made it a blockbuster, generating tens of billions in annual sales and saving countless lives worldwide. Yet, despite 𝗗𝗓𝗏's massive impact, Wall Street remains fixated on its looming patent expiration. Analysts worry that when generics arrive, Merck's golden goose will be cooked. But this narrow focus misses the bigger picture. Merck is far more than just one drug. Merck is squeezing every ounce of value from 𝗗𝗓𝗏, securing new approvals for additional cancer types and earlier lines of therapy. The cash flow from 𝗗𝗓𝗏 is being strategically reinvested, fueling a new wave of research and development that's already bearing fruit. This is a company that knows how to turn today's success into tomorrow's breakthroughs. Their pipeline is one of the most robust in the industry, with dozens of late-stage candidates targeting not just cancer, but also vaccines, cardiovascular disease, and even infectious diseases. Merck's scientists are pushing the boundaries of what's possible, exploring new modalities like mRNA, gene editing, and next-generation biologics. Recent acquisitions have supercharged Merck's innovation engine. By snapping up promising assets like antibody-drug conjugates, Merck is positioning itself at the cutting edge of oncology. These new therapies have the potential to deliver targeted cancer-killing power with fewer side effects, opening up huge new markets and extending Merck's leadership for years to come. But Merck isn't just about cancer. Its vaccine business, anchored by Gardasil, is a global force. Gardasil protects against HPV, a leading cause of cancer, and demand is surging worldwide as more countries adopt vaccination programs. This business provides a stable, growing revenue stream that's less vulnerable to patent cliffs and market cycles. And there's more. Merck's new cardiovascular drug, which recently received regulatory approval, is expected to add billions in annual sales. This not only diversifies Merck's revenue beyond oncology, but also taps into the massive growing market for heart disease treatments, a key area as populations age and chronic diseases rise. Despite all these strengths, the market remains laser-focused on the so-called patent cliff, undervaluing Merck's transformation and the resilience of its business model. The stock trades at a discount to peers, even as its fundamentals improve and its growth prospects brighten. For investors, this creates a rare opportunity. Merck offers a strong, growing dividend, backed by a fortress balance sheet and reliable cash flows. The company's commitment to returning capital to shareholders is unwavering, making it a favorite among income-focused investors. Merck's management team is disciplined and forward-thinking. They're not chasing fads or overpaying for acquisitions. Instead, they're making strategic moves, investing in high-potential areas, forging smart partnerships, and ensuring that every dollar spent drives long-term value. With a global infrastructure that spans every continent, Merck has the scale and reach to launch new drugs quickly and efficiently. This worldwide presence is a huge competitive advantage, allowing Merck to tap into emerging markets and respond rapidly to shifting healthcare needs. Of course, drug development is never without risk. Clinical trials can fail, and regulatory hurdles are high. But Merck's diversified pipeline, spanning multiple therapeutic areas and technologies, helps mitigate these risks. No single setback can derail the company's long-term growth story. By the time 𝗗𝗓𝗏's patents finally expire, Merck will have a new generation of products ready to take the baton. The company's pipeline is designed to ensure that growth doesn't skip a beat, with multiple late-stage candidates poised for approval and launch. In a world of economic uncertainty and market volatility, healthcare remains one of the most defensive sectors. Merck stands out as a pillar of stability, offering both protection and upside for investors seeking to weather the storm. Merck's track record in research and development is second to none. Time and again, the company has navigated patent cliffs and emerged stronger, thanks to its relentless focus on innovation and its ability to adapt to changing market dynamics. The long-term tailwinds are powerful. As the global population ages and cancer rates continue to rise, demand for Merck's therapies will only grow. The company is uniquely positioned to benefit from these demographic shifts, with products that address some of the world's most pressing health challenges. Yet despite all this, Merck is often overlooked or even penalized by the market for risks that are years away. Investors are so focused on what could go wrong that they're missing what's already going right. The real value lies in Merck's current business, which is thriving, and the true catalyst will be when the market finally recognizes the strength and depth of Merck's pipeline. That recognition could unlock significant upside for patient investors. With a market cap of $212.76 billion, Merck delivered revenue of $64.17 billion in 2024 and net income of $17.12 billion. The company boasts an EPS of $6.88 and trades at a P/E ratio of 12.22, suggesting it's priced attractively relative to earnings. Its 3.81% dividend yield adds to the appeal for income-focused investors. All eyes are now on Merck's upcoming Q2 earnings announcement scheduled for July 29, 2025. Expectations are high, especially around the performance of blockbuster drug 𝗗𝗓𝗏. Merck also recently declared a fourth-quarter dividend of 81 cents per share, reinforcing its commitment to delivering shareholder value. Despite the potential for earnings volatility, investor interest remains strong as analysts weigh its long-term prospects against near-term headwinds. This is the definition of a classic value investment, an industry leader trading below its intrinsic worth, with a clear path to future growth. For those willing to look beyond the headlines, Merck offers both safety and significant upside. Don't let short-term fears or market noise distract you from Merck's long-term potential. The company's foundation is rock solid, and its future is brighter than most realize. Take a closer look at Merck's pipeline and its current valuation. This is a sleeping giant, quietly building momentum, ready to awaken and reward those who recognize its true potential before the rest of the market catches on. The window of opportunity is open now. Consider getting in before the market fully appreciates what Merck has to offer. A rare blend of stability, innovation, and growth that's hard to find anywhere else. Finally, let's talk about Pfizer, ticker PFE, a global pharmaceutical powerhouse that's been a household name for decades. In the aftermath of the pandemic, its stock has taken a beating, falling out of favor with many investors. But beneath the surface, this could be a golden buying opportunity for those willing to look past the headlines and dig deeper into the company's transformation. The market seems to have written Pfizer off as a one-hit wonder, riding high on the success of its COVID vaccine, 𝗗𝗓𝗏, and then fading into the background. But that's a huge mistake. The COVID vaccine was a breakthrough, but it's only one chapter in Pfizer's long story of innovation and impact. Instead of resting on its laurels, Pfizer used its COVID windfall to make a bold move, acquiring Seagen, a leader in cancer therapies. This acquisition instantly vaulted Pfizer into the top tier of oncology, one of the fastest-growing and most lucrative areas in medicine today. This wasn't just a splashy deal for headlines, it was a calculated strategy to turn temporary COVID profits into a permanent growth engine. By integrating Seagen's cutting-edge cancer treatments, Pfizer is building a foundation for sustainable long-term revenue growth. Seagen could add tens of billions in annual revenue over time, but that's just the beginning. Pfizer's internal pipeline is robust, with new drugs for RSV, ulcerative colitis and migraines already launching or in late-stage development. These aren't just incremental products, they have the potential to become blockbuster drugs, each addressing massive patient populations and unmet medical needs. Yet, the market remains fixated on the decline in COVID-related revenue, ignoring the fact that Pfizer's pipeline is reloaded and ready to drive a new growth cycle. The current stock price reflects only the fading pandemic windfall, not the company's future potential. Right now, Pfizer trades at a dirt-cheap valuation, with a dividend yield that's among the highest in blue-chip healthcare. For income-focused investors, this is a rare chance to lock in a generous payout from a company with a rock-solid balance sheet and a history of rewarding shareholders. The company isn't just sitting back and hoping for the best. Pfizer is actively streamlining its operations, cutting costs and sharpening its focus on profitability in the post-COVID era. Management is determined to make every dollar count and drive efficiency across the business. Of course, execution is always a risk with any turnaround story, but Pfizer's global scale, manufacturing muscle and commercialization power are unmatched in the industry. Few companies can bring new drugs to market as quickly or as widely as Pfizer can. At today's depressed price, you're essentially getting Pfizer's entire future growth pipeline for free. The market is only pricing in the decline of legacy products, completely overlooking the upside from new launches and the Seagen acquisition. As these new products ramp up and start contributing meaningfully to revenue, the narrative around Pfizer will shift. Wall Street loves a comeback story, and when the numbers start to turn, the stock could re-rate much higher, rewarding those who got in early. Another key strength is Pfizer's diversification. The company operates across dozens of therapeutic areas and sells its products in nearly every country on Earth. This global reach and product breadth provides stability and resilience, even when individual drugs face competition or patent cliffs. Management isn't afraid to bet big on the future either. They're doubling down on mRNA technology, which proved its worth during the pandemic, and now they're making a major push into oncology, one of the most promising frontiers in medicine. Meanwhile, Pfizer's established drugs like Eliquis and Prevnar continue to generate billions in steady cash flow, providing a financial cushion as the company invests in its next wave of innovation. Right now, sentiment is at rock bottom. Investors are pessimistic and the stock is trading near its 52-week lows. But history shows that the best bargains are often found when fear is high and expectations are low. Pfizer is a classic contrarian play, deep value, high yield, and a clear path to renewed growth. For those willing to go against the crowd, the risk-reward setup is compelling. Of course, turnarounds don't happen overnight. It will take time for new products to gain traction and for the market to recognize Pfizer's transformation. But patient investors who can look past the current noise could see substantial rewards as the story unfolds. The company has a market capitalization of $138.71 billion, and in 2024, it generated $63.63 billion in revenue, with net income totaling $8.03 billion. Pfizer's EPS stands at $1.38, with a P/E ratio of 17.62. The dividend yield is an attractive 5.22%. Despite these numbers, the stock price at $24.31 is trading well below fair value, an estimated 137.66%, under its intrinsic valuation of $57.77. To counteract revenue pressure from the declining demand for COVID-19 products, Pfizer is executing a $7.7 billion cost savings initiative, aiming to boost margins and EPS. Excluding pandemic-related revenue, the core business has actually grown 12%, driven by gains in oncology and vaccines. Regulatory tailwinds are also in motion. The European Medicines Agency has recommended approval of Pfizer's variant-adapted COVID-19 vaccine. The company also inked a major licensing deal with 3SBIO, strengthening its oncology pipeline with a promising bispecific antibody. And in a show of stability, Pfizer just declared its 347th consecutive dividend, 43 cents per share for Q3 2025. Don't be fooled by the negative headlines or short-term pessimism. Look at the transformation underway, the new products, the strategic acquisitions, the renewed focus on efficiency and innovation. By buying into Pfizer now, you're positioning yourself for future growth at a discount, all while collecting a healthy dividend as you wait for the turnaround to play out. In a market full of uncertainty, Pfizer stands out as an opportunity too good to ignore. For investors with vision and patience, this overlooked giant could be primed for a remarkable comeback. There you have it, 3 underrated stocks poised for significant growth: Novo Nordisk, Merck, and Pfizer. The market's short-sightedness is your opportunity to buy quality companies at attractive prices. Want to level up your investing? Check out my Value Stocks Investing Master Course. Link in the description. For exclusive stock tips and in-depth analysis, join the Stocks Galore Patreon community. Which of these stocks are you most bullish on? Let me know in the comments. Don't forget to like, subscribe, and share for more investing insights. Thanks for watching. See you in the next one.